In today's video, we're going to show you how we identify low-risk short setups when the market is in distribution mode. And over the past few weeks, market conditions have deteriorated, and we now see the S&P sitting well below the 50-day moving average. Let me take this off for a second. We see the S&P, the price action, has broken down below prior swing lows and has lost the 50-day moving average, and the 20 now is below the 50-day moving average as well, and the 50-day moving average has also lost its uptrend. It's just been going sideways the past few weeks. So we clearly see that there's a cluster of resistance in the I'd say the 130, the 143 to 145 level, and many traders make the mistake of selling short a stock or ETF the moment it touches a resistance level. And that's not what we're trying to do here. We don't want to predict any price action. We prefer to wait for a low-risk short setup to develop. And what we mean by that is we're looking for some sort of stalling action over 2 to 3 bars or a one-day reversal candle. Something that gives us a signal that the short-term move up is beginning to weaken. The problem with shorting on a bounce into resistance is that you have no reference point for your shorts. So if one was to short the S&P just on the first touch of resistance around this 143.20 level, other than placing a random stop above the 50-day moving average, the next logical spot is above resistance of the swing high, which is above the 146.50 level. And for an entry at 143, that's a fairly wide stop, and such a wide stop will reduce your share size, and you'll end up making less on the trade. Rather than initiating a short on the first touch of resistance, if we wait for 2 to 3 days of reversal action, we could potentially see a short entry develop around the 50-day MA. And depending on what candles print, if there are a few reversal days, we might be able to place our stop right above our entry point, giving us a lower risk entry point, a tighter stop, and therefore either we could place more share size, or we could keep the same share size as we had in the other scenario where the stop is above the high of 1018, but we have less risk on. So either way, we either risk less or we make more on the trade when we are more patient, but we simply do not short into the bounce on the first touch of resistance. Well, that's it for today's video. This is just a simple review of how patience really pays off on the short side. You don't want to be too anxious with your entries. If you like what you've seen in this video and you want to learn more about our swing trading system, simply go to morpheustrading.com and sign up for a risk-free 30-day trial of our nightly newsletter, the Wagner Daily, where we swing trade stocks and ETFs with a 1 to 4 week holding period. Thank you for joining us. Have a great day.